Hey everyone, welcome back to Helping Make Sense. I wanted to spend today talking about a topic that's been in the news recently and we have a deadline approaching, and that's around taxes. Tax day, of course, being April 15th. I wanted to cover three misunderstood concepts around taxes that may help you in knowing why your return was what it was, or what you're hearing from friends or neighbors or coworkers, and to hopefully close some knowledge gaps around some things that can be confusing about taxes. So the first misconception I wanted to touch on is that tax brackets don't tax all your income at the same rate. You may have heard before that if you make more money, they're going to take more. That's true to an extent, but in our progressive tax model, it's a bit of an oversimplification. Take a look at this breakdown here of the 2026 ordinary income tax brackets. If you pay attention here specifically to the single column there on the left, let's say that somebody makes $125,000 per year. As you can see, that number falls in a 24% tax rate. However, that doesn't mean that all $125,000 are taxed at 24%. Jumping back up to the top, it's actually incremental. So the first $12,400 you make are taxed at 10%. The $12,400 first dollar through the $50,400 you earn are taxed at 12%, and so on. So it is true that the more money that you earn, the bracket that you are in can rise, but that's not to say that if you're in the, let's say, 32% tax bracket, $201,776 to $256,225, that entire salary is going to be taxed at 32%. It's only the dollars that you've earned within that bracket. The second misconception I wanted to touch on is a tax refund being free money or suggesting that you did something right. All a tax refund means is that you overpaid the government in the preceding year and they held on to your money interest free. It definitely feels good to get a check, especially when it's four figures, right? $1,000 or more. But if you're budgeting properly and you're withholding the correct amounts or the ideal amounts in your paychecks, you want to have as close to zero when it comes to tax return time as possible, right? So you don't want to owe anything and you don't want to be owed anything, because what that suggests is you were pretty much on target of having the money that is yours versus the government having the money that will be theirs. Now, to be fair here, you can't know for sure necessarily exactly how much you'll get back or how much you'll owe. And if you're plus or minus even $500, $600, that's fine, right? Not the end of the world. But if you're somebody who owes or is owed $1,000, $1,500, $2,000 or more, I definitely recommend speaking to a tax professional to determine where can I withhold a little more throughout the year, or where can I change my election so that I get more during the year, so that come tax return time, you're pretty close to zero, particularly at the federal and state levels. And then the third misconception I wanted to touch on is that write-offs don't mean that something is free. So you may read or hear something that is tax deductible, let's say mortgage interest, for example. So when you get your statement from your bank that shows you paid, for example, $5,000 in mortgage interest in a given year, people may think that, oh, I'm going to then get that $5,000 back from the government. That's not exactly how it works. All deductions or write-offs do is reduce your taxable income. So yes, you are reaping some benefit from taking a deduction, but it's not the entire amount. That would be what's called a tax credit. So in the example of mortgage interest, again, just to keep the numbers simple, let's say you make $100,000 and your mortgage interest is $5,000. Now, rather than being taxed on $100,000, now you're taxed on $95,000. So it's still somewhat helpful when it comes to your bottom line, but it's not as powerful as some people may think it is when they say, oh, I'm going to write this off or I'm going to deduct this. That's great, but it doesn't necessarily mean that you're going to get $5,000 because you took that deduction. A quick sub point on deductions is there's two ways that you can file your taxes: itemized and the standard deduction. The super majority of people will likely take the standard deduction. It's just the government's way of saying, hey, rather than figuring out in the preceding year where you can save on your tax liability, they're just going to say, hey, you can deduct this amount, no questions asked, and then you don't have to worry about finding expenses like charitable donations, medical expenses. There would be a lot more work to deduct from your income by way of itemizing or taking each one and laying out what you spent money on that's tax deductible to attempt to decrease how much you owe in taxes. Now, if you did spend a significant amount of money, perhaps well beyond the standard deduction, in things like medical expenses, charitable contributions, or any other means of reducing your taxable income, then yeah, it definitely makes sense to itemize so that you can decrease the amount of dollars you're taxed on. But for most people, the standard deduction, it's quicker, it's easier, and it's going to be more efficient for people when filing their taxes. And then the last kind of bonus point here I wanted to make is around bonuses. If you work at a company that pays you out a bonus, it always feels like those bonuses are taxed so much more. Bonuses are oftentimes withheld differently, so it kind of feels like, wow, they took half of it that I didn't even get to see. I just want to reassure you all that come tax time the following year, it will all equal out in the long run. Meaning that if the withholdings for tax purposes were greater for your bonus, that's still going to be accounted for in your W-2 or any other types of tax documents you get from your employer. So even if they did withhold a little bit more for taxes, or if it feels like that, just know that come tax time, it'll all be effectively pooled together as your income, and then they'll determine the calculations from there so that if too much was withheld, you'll get it back come tax time. I know taxes aren't a super fun topic to listen to or talk about, so if you made it this far in the video, many thanks for listening and tuning in. I try to make it as fun and tangible as possible. Please let me know if there's anything, as always, that I can clarify. If anybody would be itching to learn more about certain tax concepts, please let me know in the comments. If it's something that I can speak to in a way that makes sense, not professional tax advice or anything like that, I'll be more than happy to do my best. Until the next video, thank you as always for watching. I'll see you then.